I'm John Gragg, your certified financial planner with APSadvisor.com. And in this channel, we help our clients and viewers plan for a comfortable retirement. Today's video, we're going to talk about the RMD, or the required minimum distribution, which is a really important rule because if you don't follow it, you're going to be penalized. Let's start by just explaining why it's here in the first place. And that's because the money that is susceptible to this rule has not been taxed yet. So Uncle Sam decides, well, I'm going to make a rule and I'm going to call it the required minimum distribution so that I can get paid on that money that you have had a tax benefit on all of these years. So let's start by asking the question of who actually needs to take this. That is anyone who owns a tax advantage retirement account, such as a traditional SEP or simple IRA. It also includes any retirement plan accounts like a 401k, 403b, or 457. The exceptions are Roth IRAs and in 2024, Roth 401ks and 403bs. And this makes sense because you've already paid taxes on this money. The money, once it comes out of these accounts, is tax-free. So Uncle Sam doesn't really care at that point. The other exception is any account owner in a workplace retirement plan. They're allowed to delay taking those RMDs until the year they retire. That is unless they're a 5% or more owner of the business sponsoring the plan. Next question is, when do I take RMDs? And typically it's been 70 and a half. They've bumped that up to 72. And now if you have turned age 72 after December 31st, 2022, that means your RMD age starts at 73. Now you have to take your first RMD by April 1st of the year following the year you turn 73. And then all subsequent years, the RMD must be taken by December 31st of each year. Now let's figure out how the RMD is actually calculated. And the best way to do this is just to go on Google and type in RMD Calculator. Look for a reputable company. And just remember that trust on the internet needs to be earned. So make sure it's a household name. There's tons of RMD calculators. You're probably going to know the companies that pop up right when you Google it. So once you get in there, you're going to need the value of your account on December 31st of the previous year. You're also going to need your birth date, and then it's going to shoot out your RMD for the year. Now, a quick note is that if you have, let's say, 3 IRAs, you can calculate all 3 RMDs for those 3 accounts, add them up, and then take them from one IRA, but that doesn't count for retirement plans. So just make sure that you separate those. Let's talk now about penalties. And prior to the Secure Act 2.0, the penalty for not taking an RMD on time was 50% of that year's RMD. That can be very significant. Luckily, they brought it down to 25% for this year, potentially down to 10%, but still 25% is a significant amount of money that's really easy to avoid. So you really shouldn't have to hit any of these penalties. What if I don't need the extra money? And what a great problem to have. So you have a few options. Obviously, you can take that money and put it into a taxable investment account like a trust, a joint, or an individual brokerage account. You can also donate it to a charity. And if you talk to your CPA or financial advisor and do it properly, it shouldn't be taxed as ordinary income. The other option is just to have fun with it. Go on a vacation or go out to a few nice dinners, whatever it is, it's your money. So after that, I'm going to wrap it up. That's all I have for today. Again, I'm John Gragg with APSadvisor.com. Until next time, have a great day. I hope you enjoyed today's video. If so, please subscribe to our channel. It's really important and helps us get this content out to more people. Enjoy the disclosures, and I'll see you around during our next video.